Welcome back, everybody. This is going to be the watch list for Monday, January 22nd. So what I want to do is I want to start with the S&P 500, or the SPY, which has officially closed at an all-time high. So what were some of the catalysts that actually pushed the market higher on Friday into the close? Well, I'd like to chalk it up to a couple of things. First and foremost, consumer sentiment came in way better than expected, which beat a prior year's high. So the index was in the 70s, meaning that consumers are feeling really good about where they're at. They're feeling really good about their jobs, and they're also feeling really good about the economy. Inflation is coming down, so consumer sentiment goes up, which is typically very bullish for the market. The other thing that happened on Friday is what's known as OPEX, or options expiration. And this happens the third Friday of every month, where all of the weekly, the monthly, and the same day options, 0DTEs, all expire on the same day. So there were literally 58 million contracts that were going to expire either worthless or in the money, that had a notional value of about $1 trillion. So what does that mean for the markets? Well, all the market makers that are holding these contracts on behalf of their clients in a fiduciary capacity have to level up. So they have to go out and buy the security or sell the security for the options that are expiring in the money. So there is a tremendous amount of volatility on OPEX Fridays. So mental note, third Friday of every month, there is going to be much more implied volatility in the market because of the sheer volume of options that are expiring. So what would I look for in the SPY? Would I go long here? I would probably wait for a retest back to where it broke out. So you can see our prior high was on January 4th of 22. And then what did the market do? Precipitously sold off very quickly. And where are we at today? Well, we are trading above that. And so what I would look for is a retest, and I'm going to take this from a 1 day down to a 4-hour time frame, and I would watch for the retest of about 480 before I would go long. So we'll see what the market does tomorrow. Does it rip higher? Unless there's some news that would be a catalyst to do that, I'm probably thinking that it will come in a little, consolidate, and then move up from there. Now, if the market for some reason should start to break down, where would I look to go for support? Well, probably very similarly. Just go back a couple of days and see where did we pivot before we started moving higher. And we started doing some consolidation right here around the 472 level. So I would keep my eye on something between 472 and 475, and then 480. But probably wait for a retest before you decide to go long. Let's take a look at the triple Qs. Same exact thing. I mean, just an exponential move to the upside. All-time highs, nothing even comes close. So you look at the prior highs where we were at was all the way back here, November of 2021. We have clearly broken through this, came up, dropped below, hovered around it, and now have exponentially moved higher. So what would I look for here? Exact same thing. You're going to want to watch and see how did the significant 7 move. Apple, Google, Microsoft, NVIDIA, Amazon, so on and so forth. And we're going to look at 2 of them tonight. We're going to look at Apple and we're going to look at Amazon. But definitely, I think on this one would be another one. I'm going to go to a lower time frame of the overall 5-minute. We're holding steady in the aftermarket hours, but it was a weekend. So you're going to want to watch and see how this plays out first thing pre-market. But what a move higher. I mean, it's just amazing. We went from 414 all the way up to 421. If you were in calls down here and just let them ride the entire day, I did the math on this. This was an 800% return. So let's look for some consolidation, possibly a pullback. Where would I like to see a pullback come down to? Probably about halfway the market move all the way up. I mean, it's just you're in uncharted territory. So there is no overall sellers up here that the logarithms are going to catch. You will see some buyers down here where we had these breakouts, but definitely quite an aggressive move up. So let's look at some individuals, and that might be the way you want to play it this week. Let's start with looking at Apple. So Apple, interestingly enough, let's go back to the 1 day and see what happened here. They previously had, and I think I mentioned this, 2 analyst downgrades, right? So you had 2 analysts. I'm just going to remove our drawings here because the prior uptrend is no longer applicable. We had some analyst downgrades, 2 of them, and literally the stock gapped all the way down till it started to find some support right here around the 180 mark. You'll see the candle came down and touched. We moved higher. We came down. We retested. We touched. There is a very small gap here that will probably fill overnight. And then what would I look for if the market momentum is still strong? I would say that we are going to go back up to this prior pivot here at 194. And then my next target would be up here at 199 and see if we break through to the 200 mark. Now, if the market is weak, obviously keep your eye on the gap fill to the bottom, right? One analyst upgrade literally changed the trajectory of the entire market, which is interesting. It was an analyst that was normally very bearish on Apple, and then they all of a sudden came out bullish. That always makes me wonder why. So if I was going to check back to the downside, I would play for a gap touch on the top side to 185 if I was going to be in puts. But if you're going to go with calls, I would look for the next target to be about 195. Right now we're trading at 191. Let's take a look at the next one, Amazon. Amazon, another one that has had really good relative strength. Let's go ahead and take a look at where we checked back. I'm going to go all the way to the left. So you'll be able to see we have cleared this pivot high with absolutely no problem. We had some consolidation here. We came up, came back down to the same zone, and then we pushed higher. So let's take this in, and where would we go next? Well, I would target this 158 from the overall call perspective, and then there is a minor, very minor gap fill right about here that you would want to pay attention to at the 162, 163 to 164 level. If we break above this prior downtrend pivot, I think you just go long all the way up to the gap fill of 165. Let's take a look at another one. Let's take a look at AMD. The chips have just been absolutely skyrocketing higher. AMD, no exception. A ton of volatility. It was up 6% the other day, and then it ended up being down 1%, and then finishing up 1.5%, which is exactly why we want to play options. I mean, it's the overall volatility that really makes the contract prices move versus owning the stock. I mean, could you imagine buying this at $170 a share, and then you have a 6%, 7% move lower in a day, literally stock dropping by $8 to $10, and then only finishing up 1% to 2%. Not a good risk reward. So what would I watch? Let's go down to the 4 hour and see where this is. Again, guys, we are at all-time highs. So I would probably wait for a check back closer to the 165, 170 range before I would go long to, again, yet new all-time highs. For me personally, I'm always apprehensive of buying all-time highs within the market until you see some consolidation. Doesn't mean it can't move higher. And then just look at the volume on this over the last couple of days. It has been absolutely insane. So keep an eye on AMD. If it checks to the downside, again, it's going to check down pretty hard. It's not uncommon for these stocks to move 5, 6, 7% in a day. So if you're getting weakness, play it down to the 170 put or the 170, the 170 put or the 165 put, playing it long, wait for a pullback, and then go long. I want to take a look at Boeing. So I have been in one of my prior master classes, some of the students are constantly asking about Boeing, and I was just like, can't get comfortable with it. And it had already made its move, so I never like to chase, right? And then what do you have? You have a news event, and the news event literally causes the stock to plummet, okay? So, we definitely dropped. We had a prior pivot where we were starting to move up here from 157, where a lot of the traders were starting to go long. You have a very significant gap fill right above this, where it just dropped off a cliff, that I think you can keep an eye on from an overall target perspective. If we were to take a look at a Fibonacci retracement on this, just looking for a bounce as to, well, what would make sense? Because think about it. Everybody who literally bought this entire way up is now underwater. So if they're going to want to get out of it, where would they get out of it? Or could the news change to the upside? So let's take a look at this from a fib retracement level. We're going to do a pivot high to a pivot low. And ironically, it's going to actually reject right around where this gap fill is. So we're trading right now at 215. I think this is one that you could probably, with momentum, start to go long all the way up into 233. Again, it was literally in December just trading at 265, where traders were anticipating that this thing was going to go all the way to 300. You do have another gap fill right above this, which is kind of a first target that I would pay attention to right here. So if we can get above this 215, 217 area, I definitely think that it makes sense to then go long in $5 increments. 220, 225 with an ultimate target at 235. See if it rejects 235 or if it pushes higher to 241 and then 262. We'll want to watch and see what's going to happen with their earnings. Earnings are going to be released on Wednesday, January 31st. So they're going to be coming up here in about a week. If you get really solid earnings and good guidance, I definitely think this thing's going back to the gap fill, because this huge drop was just based off of news. So no different than anything I've shared before. You will make more money when the market is dropping than when it's moving up. Why? Because panic sets in. People don't think rationally. They throw out the baby with the bathwater. They sell the stock. Implied volatility goes through the roof, and therefore your premiums spike exponentially. One last one I'm watching is going to be ExxonMobil. I really did like the pattern and the setup for this stock where it was at. Oil keeps breaking lower, so this is going to be a two-pronged approach on this one. We are at a fairly stable support level. Right about here, where we came down, wicked, and moved back up. We did not touch the line, and we've been able to stay above it. We stayed above it here. And the thing is, with these oil refiners, with oil even at $70 a barrel, they are exceptionally profitable. It's not until oil gets down to about $50 a barrel that they start to run into some problems. So there's been a huge consolidation within the refiner space, whether it's ExxonMobil or Chevron. But at some point, I would definitely think that there will be a sector rotation of money coming out of some of these tech stocks that are at all-time highs and going into undervalued sectors like healthcare and energy. So this is a two-pronged play. I think if you get some momentum and some strength, right now we're trading at about $97 a share. I think you can play this for the $100 calls. If you're going to play it to the put side, I would play it to the downside. I would definitely say that I would probably target fairly shallow. You'll see that we have a little bit of a gap that needs to fill right here. So I wouldn't go too far down with puts. You'd probably want to play that to about the $95 put level. But wait and see what it does right around this target. And I think this might be an opportunity to go long, because usually from a seasonality perspective, and what we watched happen over the last couple of years is you will have sector rotation as people will start to hunt for better values. And tech is clearly overbought. At least that's my opinion. So hopefully this was helpful. You learned something new. And with that, trade safe, trade smart, and have a great week. I'll catch you all later. Take care.